All right, let's go ahead and get started. So today, a lot of things to accomplish. So first, I just finished assigning the teams for this section. So I want to make sure that, and this is true for all the sections, that everybody should be on a team as of today. So if you can briefly look at the team list, if you go to Elms, People, and then there's Teams, there are a total of 28 teams, and they are by section. So 1 through 7 is 101. 8 through 14 is 201. 15 through 21 is 301, and 22 through 28 is 401. So just make sure that you are on one of those teams. Like, check right now. If you're not, before you leave today, let me know. I need to make sure you're put into those teams. So generally, you'll have about 6 or 7 people on each of your teams. They're kind of randomly assigned. And this is very important because these are the people you're going to be working with this semester on your group projects. And the first group project that you should be starting today is Stock Track. So whoever was put in the team first is your random team leader. That doesn't really mean anything. It's like being a project manager on The Apprentice. But other than that, you're not going to get fired. But in it, there's no humor here today. That's okay. So basically, as a team, as I said, you need to meet your team members because you're going to have to start working and signing up for Stock Track. So between now and Monday's when Stock Track starts, one of the persons on your team needs to go to Stock Track and register, pay the $31.95 for your team account. The rest of the team members should reimburse that person, preferably equally. So if you go to the syllabus, here's a link on the syllabus. Excuse me. If you go to the syllabus, this is the link that you need to type in or copy and paste to get to the right Stock Track. Because when you register, and you can see at the end where it says name equals, that's the actual code that will tie you to this class. And basically, when you register, the 27 teams that will be registering, because one of the classes is a little smaller, so I'll let the blank team in there, but basically the 27 teams will register on that link will tie us all together. And that's how we'll do the grading. So when you register, you can choose a friendly name so we can identify your team. Just make sure it's not overly friendly and it's perfectly acceptable in a normal environment to use. But what we'll then do is we'll replace your team name, Team X, with whatever that friendly name is, because the competition for Stock Track is within your section. So what matters is not how you do against the 27 teams, it's how you do with the teams that are registered for your section. So the 7 teams that are in this room. Okay. So I need to know who those friendly team names are once you register so that I can then change the names on Elm so you know when you see the results who you're competing against. All right. So what will happen is you'll go to Stock Track. So close out of this. Stocktrack.com. And then once you have an account, you can come back here, username and password to log in, and it'll bring you to your account. Now, trading hasn't started yet, but when you start on Monday, so register between now and Monday, you'll have $1 million hypothetical dollars in your account. You can trade on margin, which means you'll have up to $2 million worth of purchasing power with that account. All right? And then basically, over here, you can see this under My Portfolio. There's a rankings, which they do as a batch process overnight. So right now, the only people in here are myself, Jay Perfetti, and 2 random accounts they gave me that I could trade for the class if I want to, which I'm not. I'm just going to leave them alone. So as the teams register, you will show up on this list the next day. All right? And then once we rename the teams, you know who the teams are, then you'll know who you're competing against in this section. We'll identify. So what will happen is you'll start trading as soon as Monday, and then basically what will happen is in about 5 or 6 weeks, the deadline's on the syllabus, the trading will stop. We'll then look at the reports and the rankings, and then we'll rank you relative performance. So whoever has the highest portfolio value in your section will get 5 points. Second and third will get 4 points. Fourth and fifth will get 3 points. Sixth will get 2 points. Seventh will get 1 point on the assignment. And then we'll continue for another 6 weeks and then end the semester with that ranking. Yes?
Can we see the real-time standings as it goes along?
Stock Track is a little less than real time, so you'll see your portfolio in real time, but you won't see the real time rankings of anybody else. Right. And Stock Track will only show you the portfolio values of the other teams. They won't show you their holdings. So you'll see value and number of trades, but you won't see holdings. Okay. Only your team will see your own holdings. But yes, it'll update you in real time. But for the rankings, it's just a batch process at the end of the night. So a couple more things you need to know about Stock Track. So first, across the top, when you do go to trading, there's a trading tab, and there's a lot of stuff you can do. So you can buy stocks, ETFs, options, currencies, futures, future options, bonds, spots, commodities, a lot of stuff you can buy, almost all of it disabled. So for this class, I've disabled everything with the exception of stocks, ETFs, and mutual funds. That's it. And Stock Track allows for day trading. Disabled that. Anything you buy today, can't sell until tomorrow. Anything you short today, you can't cover until tomorrow. All right, so there's at least a 1 day lag on all buys and sells. And again, you can only do stocks and ETFs and mutual funds. In addition, minimum share price for stocks, $3 to buy or to short. No trading in penny stocks near bankruptcy companies, that type of stuff. So you got to buy a legitimate company. Now, if you buy a company at 3 and it goes to 2, you can sell it, but you can't buy it back at 2. Okay? You can't short a company that's like at 50 cents. You got to short it at least at 3, and it can go down from there. There's a minimum thing. But I've enabled just about any exchange in the world. So it's not just U.S. companies. You can actually go global. So if you know a lot about Asian companies, could be very much to the advantage of your team. Okay, so you're not just restricted to U.S. companies when you do your trading. But nonetheless, it is going to be buy today, sell tomorrow. Right? Now, in terms of a team, it's team grade. The person that registers will have the team login and password, and it is up to the team, very important, to determine who has access to the account and who is making the trades. In the past, we have had what I've called the rogue trader. Basically, somebody in the team goes in, makes a bunch of trades, loses a lot of money, destroys the team's grade for the semester. Nothing we can do about that. So it is up to your team to decide who's trading what and when, and to manage that as a team, because you're going to get a team grade, and I can't intervene after the fact if you made a bunch of transactions. So just make sure that you don't have that rogue trader problem and talk to each other as a team, because it will be a team grade. Notice how many times I've said the word team. Okay? So you know who's on your team, meet them, greet them, preferably before you leave today. Right? Questions about any of that? Hopefully pretty straightforward. All right, so that is the Stock Track Sim. As I said, you can register today. I encourage you to register over the next few days. Trading starts as soon as Monday. And then here's the other thing. You have to participate, which means minimum 10 trades each half of the semester. So that's buys or sells are considered a trade, but you have to at least make 10 transactions. So I can buy Apple, sell Apple. That's 2 transactions. But you got to do a minimum of 10. If you don't do 10 in each half of the semester, and it's incremental 10, then you get a 0 for the team for the entire assignment. Okay? So must do at least 10 trades. I'm sure you'll probably do more than 10, but that is the minimum. Right? And so the other thing is the Stock Track cost is like $5 or $10 a trade, and you get $1 million in your account. So it's almost irrelevant to your performance. So your real trading cost is going to be the write-up. So halfway through the semester, trading will end. The next day, your team will have to turn in a paper. The paper will be the rationale for why you made each one of the trades. Right? Now, from my perspective, it's only a couple of sentences. Right? So you don't have to write like a long thing. Like it could just be, hey, Apple's reporting earnings yesterday. I thought they were going to beat earnings. We bought the company. Or stock price has gone up a lot recently. We wanted to protect our winnings. We sold to protect our portfolio. So it could just be that. But you do have to write those trades. Just because I know that any writing is something you don't like to do anymore. So that's your transaction cost. The more trades you do, the more write-ups you have to do. And you have to turn that in as a group. It doesn't help your grade, but if you don't turn the write-up, you get a 0. Okay? So those are the 2 minimum quantifications. Number 1, you got to make at least 10 trades as a team by the deadline, each part of the semester. It's incremental 10, right? So if you make 20 in the first half, you still have to make 10 more in the second half, right? And you got to do a write-up for every trade, each part of the semester, right? Again, those are the 2 things. But other than that, it's just go make some money. That's the goal here, right? Questions? Yes?
Should we submit the short transaction?
Well, I show what? I'm sorry?
Where should we submit?
For which one? The trade list? Yeah, you'll submit. There'll be an assignment on Canvas, which I'll post, and then your team will submit it as a team, a write-up to Canvas. But that'll be in like 5 weeks, so you're okay for now. All right? Good question. Other questions? Okay, so that is Stock Track. You got your teams. Please start working on that. So the other thing is, if you look here at the assignment list, 2 assignments have popped up, and 2 more will pop up in the next day. So basically, Bloomberg certification is homework 1, right? It's worth, again, 5% of your semester grade. You must finish the Bloomberg certification for this class by next Friday, week from this Friday, right? Now, here's the thing about the Bloomberg certification is that you don't actually have a submission here, because with the Bloomberg certification, they've given me a link. As long as you type in the class code, I can go and see the class code that you've completed it, and I can see your score on the multiple choice questions, right? So as long as you do it, I can see it by the deadline. I'll see that you've done it. The grade can be handled that way. But this is the class code. It's in the assignment, BMGT 443. Make sure you type that in when you register, or if after you registered, go back and add it. So here's the other thing I did. In the files section, there's now a Bloomberg folder, and there's a BMC login instruction sheet that Bloomberg sent, and basically just kind of shows you the screens that you would see as you log in. So for example, when you're in the terminal, type in BMC, you get to this screen, fill in this information, and there's a checkbox right there. When you click on that checkbox, it'll pop up this window that says, what's your class code? That's where you type in the BMGT 443, all uppercase, no spaces, hit save, and then you're done, okay? And that's what you need to do to then do the certification. You have to do equities, and you have to do economic, those 2, which we talked about on Monday. So that's what you have to do as part of your certification by next Friday. So just as a reminder, number 1, you don't have to do currencies and fixed income. Those are optional, but Bloomberg won't give you an actual PDF certificate unless you do all 4. Right? Now, if you choose to do the other 2 to get the certificate with Bloomberg, you're welcome to do it, but you don't have to do it by next Friday. Like, you can do it at any time throughout the semester. You can go back to it because it remembers your progress. Same thing, as you're doing the certification, if you want to stop and come back to it, you can stop. Second thing, we had somebody in the last class that took the certification for the first one, took the exam, answered the questions, got 68, right? So it means they're not going to get credit for it. So they decided to take it again. And if you just restart it, you can actually take it again. And they did the questions, but they didn't see their score the second time. So this is a known, what I consider, flaw. Bloomberg says feature not yet enabled, but nonetheless, Bloomberg only shows you the score the first time through. If you take it again, it doesn't update that score. Now it tracks a new score, but it doesn't actually tell you how it did. And we've had this conversation with them since last summer. So it's on the we will do it eventually list. So basically, Bloomberg gives me as an administrator, assuming you typed in the code, I can go in and I can see both your scores, right? And I'll do get a batch report, assuming you associate with the class, type in that code, your batch report, and I'll pick the best score when we give you the credit. But you will not see that second score if you did it again. So if you want to see that score, I don't know how to tell you early, because until I get my login account set up, I can't show it to you. You can call the Bloomberg help desk and you can ask them if they can tell you what your second score is. That's probably your only other alternative. But here's the thing. It's only set up to take it twice. So if you take it once and you fail, and you take it again, and it turns out you failed, you lose 5% of your semester grade. So Bloomberg would have to enable you to take it again, right? Now that's at their discretion. And I'll just give you some rationale here, which I think they're using, which is this is a real certification that Wall Street requires, and they don't just want people to keep taking the multiple choice test without doing it until they pass. So it's not like they're going to want to keep resetting you to do this. And so what I'm telling you is if you actually pay attention to what you're reading and seeing on the screen, the exam is really easy. If you skip, and you just take it, you're probably going to be like that last person. You're going to fail, and Bloomberg's not going to give you an unlimited amount of tests because they're trying to protect their certification, right? Much less the certification we're for doing this class. Now, here's the other thing. Bloomberg will let you pass with less than 70%. I will not. So the 70% threshold is a Perfetti threshold for this class. And again, it's only equity and it's only the economic indicators that you have to complete. Saw some hands. Questions? Did I answer the questions you guys had? Yes, sir.
Is the actual grade you get just a completion base?
You get 5 points if you complete it. You get 0 if you don't. So again, my purpose is not to be, it's not necessarily a penalty. It's that, and you'll see today, like you're going to use Bloomberg a lot. And so by doing the certification, it will get you up the learning curve much faster because the stuff that we're doing is actually part of what you're going to get certified and see how to do in the certification. So it's really going to help you in this class. That's why we're doing the certification. Also looks good on your resume, but that's not the primary reason. That's the secondary reason. All right, other questions? All right, continuing on. Assignment number 2 is homework 2, which is EIC, which we will be completing today, what you need to do with lecture 2 in class. So you'll see that assignment, homework 2, on Chipotle, and doing an EIC on Chipotle. That is due Monday, 10 a.m. for all sections. Okay, so this is where, with the exception of the Bloomberg certification and the ethics assignments, which I'm about to talk about, the general homework assignments will have a cadence throughout the semester that they'll be available on Wednesday and due on the following Monday at 10 a.m. And so you'll submit them through Elms Canvas, and there'll be a 15-minute grace period. So 10 a.m. is the due date. 10:15 is when the link goes away. When the link goes away is when you get a 0 for the assignment. Okay, so you have it technically until 10:15, but keep in your mind it's 10. If for some reason you have technical difficulties submitting, then send an email immediately. And by the way, technical difficulty, because it's 10:16 and the link is gone, is actually considered a 0. All right, so if you're going to have filing problems and it's like 10:02, I'm just saying send an email to the TA and myself immediately saying, here's my assignment, I had trouble submitting it. All right, so make sure you submit that email before that 15-minute grace period is up. And you will see on the syllabus that the 3 TAs are assigned to the sections. You can see what section it is, their email's on there. Email them, email me immediately if you have trouble. Shouldn't have trouble for most of it, but every now and then, computers are computers, web's the web, understand it. Just email with problems. The reason why emails are more important than voicemails is emails have timestamps. Okay, and so if we see that the work was done that you emailed before the deadline, we'll give you credit for it. If you call a voicemail and said, I didn't have time to do it or had trouble submitting it, but we don't see it, then we don't really know that you didn't do it by the deadline. So emails are critical to sending it in if you have trouble. And send what you got. Like, don't just send an email saying it didn't work. Like, without the PDFs, it's like you didn't send anything. All right, other questions? Okay, so that's assignment 2. Assignment 3 and 4, which are about to be posted, are the ethics assignments. Okay, those are also going to be due next Friday. Ethics assignment number 1 will be homework 3. Is going to be, and I haven't posted yet, but I'll do it soon, from, I have the link on the last semester. I just got to post on this semester. So, the ethics assignment is this assignment. Which is a link to a self-paced course offered by the CFA Institute. And basically they have this online module, which is free, that you will sign up for, and you will take, self-paced, take about an hour, on ethics, their version of ethics, right? Now, here's the thing. This one does not require Bloomberg, and it doesn't require this lab. So you can click on this link that I'll put in the homework assignment anywhere, any computer. You just have to take it and do it and pass the multiple choice questions and get a certificate. They actually give you a certificate of completion at the end by next Friday. And then here's the thing. Unlike Bloomberg, where I can go in with a class code and see that you did it, here you have to self-report. All right. So when you complete this self-study, which you can see is ranked 3 out of 5 by 57 people. So it's kind of dry. I'll just warn you. But ethics are important. So nonetheless, and by the way, the other slightly annoying thing is that it doesn't let you skip through. So literally, you have to answer the questions after reading the content and then go to the next content and answer the questions, and they won't let you jump around. So just letting you know, when you go through it, you're going to have to take the questions as you go along. So that one's less easy to go back to and you could probably do it one shot. Probably about 45 minutes to an hour of real time to do this stuff because you got to watch some videos. But nonetheless, that's the that's what the CFA one is. At the end, self-submit to Elms that you did it, download the PDF, screenshot, whatever, and then upload it to know that you completed that. Okay? And then the fourth homework 4, which is ethics assignment number 2, will be a paper. Right? It's a different paper than we did last semester, so it's completely different. But basically, it's going to be a common paper. And it came from an article I read in the Wall Street Journal, so I'll give you a preview now, but the assignment will explain what it is. It's a 500-word essay. And basically, it's on this. The article in the Wall Street Journal basically said that increasingly companies are denying analysts access to their executives unless they give them a buy rating. Okay, and it started with Sprint. So if you're Sprint, you basically said, hey, Wall Street analysts, we're not going to let you talk to our CEO, CFO, or head of investor relations unless you give us a buy. If you're in the hold or sell, no access except on the conference call. That's it. Okay? Is that ethical? And what are the implications of that? That's going to be the ethics exam question. Okay? And so there'll be an article talking about this. The companies are doing this. And then you'll write based on ethics and particularly what you learn on this study, whether or not using a framework you think that that's an ethical choice that's making and whether it could cause some potential issues in Wall Street. I'll leave it at that. And then we'll talk about that in a couple weeks. That's going to be the other assignment. So next week, there's no lectures. And as you just heard, there's a lot of work. So I'm giving you class time to do the certifications and to do the work. The Bloomberg certification, you have to do in a lab. Now, since we're not going to have class on Monday or Wednesday, this lab should be empty. Most people downstairs don't know that this room exists. I would suggest you keep it that way for right now. And so basically, you should have a relatively empty room. You can come in at your own pace, and particularly on Monday and Wednesday, because there's only 25 terminals at any point in time. You can see that one's kind of funny. It says to the 9-year-old broken machine, please fix me. Thank you, computer. So any one time, 4 or 5 of these machines are down because they're just old, and it makes no sense that IT allows this to happen. But in any event, so we have a limited amount of computers, twice the amount of people to computers. So take advantage of that time whenever you can to come to the lab to do it. But you got to all get it done by next Friday. Questions? Easy enough? Okay, lecture 2, EIC. This is posted in the lecture notes section. So here's the deal. And I mentioned this before, but I'll remind you of this. Approximately 50% of the performance of any company or industry, any company, is the industry that it's in. All right? So the industry will determine a lot about whether or not a company does well. So this is a framework. E is economy, I is industry, C is company, for doing that external analysis to get a better understanding of what's happening at the industry level. All right? So we're going to start out with the E section, EIC, and I'm going to tell you the 3 Bloomberg screenshots that you're going to need to complete this assignment. Okay? So you'll do this as part of the economic certification, but the certification is next Friday, and this assignment's due on Monday. Okay? So here's the general idea of the E, which is the question you're trying to answer is the company and the industry that I'm evaluating sensitive to changes in economic conditions? All right. So before we go to the Bloomberg screenshots, let me just ask a general question. So if we took a company like Caterpillar, which makes heavy industrial equipment for, digging and moving dirt around, do you think that company is sensitive to changes in the economy? Probably very, right? Matter of fact, when the economy's bad, they're really going to struggle because construction drops when we don't have a good economy, and they're going to boom and bust. And that's basically what you see for Caterpillar. So that's the point. If I'm assessing Caterpillar, understanding what the economic conditions are in different regions of the world and whether those are changing, it's going to have a lot to do with Caterpillar's performance. If I were to do a company like Walmart, do you think the economy matters? Not as much, but do you think it matters? All right, why might it matter for a Walmart?
Just during an economic downturn, people's free income will be less, so they'll go towards alternatives like Walmart.
Yeah, but what if we're in a boom time?
Then they'll probably shift to more upscale.
Yeah, that's exactly what's happening in Walmart today. Walmart isn't growing as fast because people, as they have more wealth, are actually trading out from Walmart to go to higher end stores. But when we actually were in tougher times, Walmart was doing relatively better because people were trading down to a Walmart. So even a company like Walmart, okay, it's not going to be as much as a Caterpillar, but it's still going to have some sensitivity to economic conditions. And if we're analyzing a company like Walmart, then we should still be aware of that. Does that make sense? So that's the premise that I want you to start to understand. Now, what about a grocery store? Like a Safeway or a Kroger? Yep.
I say yes for similar reasons as Walmart, because there's alternatives like Aldi that are a cheaper alternative to Safeway.
So again, probably less than Caterpillar, possibly even less than a Walmart, but nonetheless, there's probably going to be some economic sensitivity there. So what I'm saying is, no matter who we're talking about, they probably have some sensitivity to the economies, and we should start to understand what that sensitivity should generally be when we're doing the analysis. That's why we're starting with the E. So to help us, 3 Bloomberg screenshots. I'm not saying that this is everything you need to do, but this is just a starting point for our process in this class. So let's go to Bloomberg. First one, EC for economic conditions, and then FC. That should get you somewhere. There we go. That gets you to what's called the economic forecast screen. And so you'll see this when you go through your economic certification, but it'll show you for just about every country in the world what is not only their historical, but their forecast for economic activity. GDP, pricing, interest rates, spending, inflation, etc. Right? So this is the U.S. by default, and you can see that for the U.S., that GDP for 2017 is expected to be 2.3% and 2.3% for 2018, with a 15% probability of recession. And we can go quarterly as well. But here's the point. Just as analysts are forecasting earnings for companies, economists are forecasting economic forecasts for countries. And Bloomberg is sucking it up and aggregating all that data. And so this is where you can access this material. So again, Chipotle, which is your company, primarily U.S., so therefore it's okay to just kind of keep simple in the U.S. But for example, if we cared about China, then I can go to China, and right now I can see the GDP in China, 6.5% this year, 6.2% is the forecast for 2018, again with a 15% probability of recession. So that is the real-time view that economists have on China today. Right? And again, it's updated all the time. So this is one of the things that will give us the forecast of the economies. Then the other one, ECSU, stands for Economic Surprise Index. So what Bloomberg did a few years ago, and again, they started with the U.S., they've now gone to the Euro area in the United Kingdom. They're adding more, but we're going to focus on the U.S. today. If we scroll down, there's about 50 or so different economic indicators. Anything from home sales, housing starts, durable good orders, jobless claims, personal income, personal spending, consumer credit, retail sales, the leading economic index of the Conference Board, the Consumer Confidence Index from the University of Michigan. All of that's on here. So they just aggregate all those economic indicators in one place. And then what they do is helpful because they do 2 things. One, they put these indexes into 6 buckets, and then they do what they call surprises. So we'll start at the top here. So on January 30th, home sales, pending home sales were reported, and the market was expecting 1%. But actual home sales came out at 1.6%. Right? Now some rounding here, but basically they came out 61 basis points better than what people expected. So it was a positive surprise. Right? So here's the other point. What they do is they show you the reaction that day of the stock market when that economic data came out. But here's the thing. Going back through 2009, this orange line is the S&P 500. And the red is when they take all of these indicators and have an algorithm that basically aggregates them all. And right now, the surprise index is more favorable, which means we're getting more positive surprises than what people expect for the economy. So generally, when we've had positive surprises, stocks have gone up. And this is the S&P 500. And we've had negative surprises to the economy, stocks have gone down. Right? So what Bloomberg is trying to show is there's been a historical correlation between good economic conditions and good stock prices, and particularly better sentiment, meaning if the market feels that things are going to be better than what we thought, stocks are probably going to do better, stock market goes up. If they think it's going to be worse, then stocks are going to do worse. So correlation between economic environment and performance of stock markets. And right now, if you look at the 6 buckets, you can see that there's been positive surprises and the stock market's been going up recently. The biggest is over here on the surveys and business cycle. It's things like consumer confidence that are basically driving the stock market today. So if we start seeing people start feeling negative about this, we start getting some negative surprises, then what it would argue is that's going to cause the stock market to go down, because some of these other areas like industrial, housing, real estate, wholesale, that's actually been worse than expected. The other thing that's helping the market right now is we're getting better than expected, basically employment data. The labor markets are coming out a little bit better. So that's the 6 sectors. They put it all together, but that's the idea. So I want to know what sentiment is on the future and whether or not we're getting data that says we're doing better or worse as a predictive measure of what prices could be. Make sense about what we just said? So let's go back to the E. Therefore, this is the S&P 500. How do I do this to an individual company like a Chipotle? How do I determine whether Chipotle is more or less sensitive to the market? What metric might help me do that? Yes?
Beta.
We're going to use beta as that proxy. Okay? So speaking of beta, what does a beta of 1 tell you? Company has a beta of 1.
That it moves perfectly in line with the market.
Therefore, if it moves perfectly in line with the market, then we're going to assume that it has the average economic sensitivity to the market. That when the market does better, the company will do better. And the market's doing better because of better economic conditions, the company will do better because of better economic conditions, tied to movements in the market. What if I think that the company is going to be less sensitive, as they talked about with like Walmart, than the market? What should their beta be?
Closer to 0.
Closer to 0 or less than 1. So the less sensitive companies aren't going to go up as fast and aren't going to go down as fast, so they should probably be low betas. What do you think Caterpillar's beta is?
Probably pretty high.
Probably well above 1, because they're going to be much more sensitive. I'm not saying it's perfect, but we're going to use beta as the proxy, think transitive property, for company to market to economy. So therefore, proxy company to economy. Everybody with me on that? So here's the point. I don't want to talk about Chipotle because that's your assignment. So we were talking earlier about Eli Lilly. So let's go to Lilly, pharmaceutical company. And once you go to a company in Bloomberg, 2 ways to get beta. 1, just type in beta, and that will actually give you a real-time beta for the company, which you can change if you want in terms of what time horizon or what index you want to regress against, but there's Lilly's beta, right? But for your assignment, I want you to go to the RV screen, which compares against peers. And so we're all looking at similar data. For the comp source, I want you to use Global Industry Classification Standard, GICS. So basically what happens is there's something called the SIC, which is US only, and companies, when you register, are put into this arbitrary government, certified industry. I think Standard & Poor's does the SIC, but basically they put you into this sector, subsector, etc. Well, the global one's called the GICS, and there are 11 global sectors. There are essentially 24 or so subsectors, sub-industries, or industries, and there's like 90-something sub-industries. And then just about every publicly traded company around the world is put by code into one of those. That's how they kind of sort them. So we're just going to pick for common data, GICS. Then, instead of doing globally, since Chipotle is primarily a U.S. company, and for purposes of this exercise, to keep it simple by having less data on here, just choose country of domicile, which means just U.S. companies. And then, as I said, you can go to a sub-industry, but I don't want you to do the sub-industries for Chipotle yet. So where it says sub-industry, just leave it as sub-industry and don't choose one. So it's just like the bigger industry level view. Okay, so it's the GICS industry for Chipotle for country of domicile. Now I'm doing it for Lilly, but it's the same setup. Okay, and then here's the thing. You'll notice across the top of my screen, it says market cap weighted average. You don't have that in your account by default. So click on settings, global settings, and you'll see a series of display checkboxes. Check the box that says market cap weighted average. So what it'll do is, and I've checked it, it'll save it to your account so that anytime you go to a screen with a lot of data, it'll give you this default weighted average. Now there's a straight average. We want the market cap weighted average because I don't want some teeny tiny company to distort the average. So they'll weight it based on their market cap. So market cap weighted average. And every time you go to a screen, it'll be there, and that'll give you the industry average. So then click on markets, and there's a sub-tab called beta. So basically what Bloomberg will do is it calculates the beta for all of the companies in the sector, and it gives you a market cap weighted average for all those companies in the sector. So I have an industry beta, and I have company betas below. Right? Now there's something called the raw and the adjusted. For purposes of this assignment, we're going to choose the raw or arbitrarily, right? By the way, what the adjusted beta is, you can see it there. It's 2/3 of the raw and 1. It's a regression coefficient that moves the beta 1/3 closer to the mean. That's just something statisticians argue about. They put in regression coefficients to smooth things out, right? I don't want to get into the argument whether or not we should be doing that, so we're just going to use the raw, which is the actual slope of the line, right? So here's the point for your assignment. Question for Lilly. Is pharma economically sensitive? If I'm answering the E part of my assignment, is pharma economically sensitive? Yes or no? All right. Well, you say yes. Why?
The industry beta is above 1.
No, it's not. It's 0.83. The raw beta is 0.83. So based on 0.83, you want to re-answer your question? So it is somewhat sensitive, but it's 83% as sensitive as the average company in that list. So, or the average company in the S&P 500. So therefore, pharma's a little less sensitive. Does that make intuitive sense? As the economy changes, should pharma change less than the economy? Does that make intuitive sense to you? Well, here's the point. Pharma's prescription drugs. When we have good times, do people take their prescription drugs? Probably. When we have bad times, do people take their prescription drugs? Probably. Like if I'm on medicine for, preventing me from having a stroke or heart attack, you think because the economy's bad that I'm going to stop taking that medicine? So what I'm just telling you is pharma benefits because people are going to take their medicine, good time, bad times. Now, some people might skip because they can't afford it in a tougher time, but the vast majority of people are not going to change their behavior just because the economy is changing. That's the point. That's what we'd probably expect, and that's probably why pharma has a beta of 0.83. Following that logic, look at Lilly. What do we know about Lilly? Beta is even less. What does that suggest about Lilly? Yeah.
Maybe it makes less things that are maybe cosmetic or optional and more things that are necessary for curing things.
Absolutely. Matter of fact, a lot of Lilly is diabetes. Insulin, you don't take your insulin, you die. I mean, it's just pretty straightforward. If you got type 1 diabetes, you got to take insulin. They're one of the manufacturers of synthetic insulin. So I'm just telling you, like, if you think about Lilly's pipeline, they're actually into products that are even more tied to you got to have it and less tied to economic sensitivity. Not saying there's not some economic sensitivity what they do, but that's the point that we get about, all right, we're starting to see in the data that Lilly's less sensitive. We got to start to understand why. Right? And that's probably one of the reasons. This makes sense to everybody? That's your E. You're going to be doing the same thing with Chipotle. All right. Now let's move on to the I. I is industry. The point of the industry is it an attractive industry? right? Now in this class, we're going to have a very specific definition for industry attractiveness. And by the way, everything I've talked about is in the book. I've assumed you've read the book. Actually, I've assumed that you haven't read the book, but I'm just telling you that it's in the book that you haven't read. So, in terms of the industry, attractiveness is defined based on spread. To be an attractive industry, you must have a positive spread. Spread is the difference between your ROIC and your cost of capital. All right, if you don't have that, you don't have a positive industry. So, before I show you the data for pharmaceuticals, do you think they're going to have a positive or negative spread? Pharmaceuticals, do you think they're a good industry or bad industry? Value creating, value destructive. What do you think? Positive? All right, here's the point. Don't answer your homework assignment based on what you just said. All right? This is actually a very important thing you have to do this semester. And the real world is not helping us today. I think one of the problems we're having in the real world today is people have stopped relying on facts and they are increasingly relying on opinions based on what they think the facts should be. And so we have to disassociate ourselves in this class. So to answer that question, the answer should have been, I don't know. Let's go look at the data, right? And whatever the data tells us should be the answer, right? And so I'll give you an example. So 2 years ago, I had an MBA student, real smart kid, and I felt bad for him because we were talking about the attractiveness of the airline industry. And in his mind, what he had always heard is airlines were a terrible business. Yet the airlines actually had about a 20% ROIC. And airlines were doing really well because fuel costs had gone down and the airlines were doing really well. But he couldn't get over his bias that airlines are a terrible business. And I said, well, it doesn't matter what you think. If you look at the objective data, airlines are doing really well. And he's like, yeah, but they suck as an industry. And I'm just like, no, they're doing really well. And he's like, yes, but they're just terrible. You don't want to own those stocks. And so I had to give him a 0 on the assignment. And I felt really bad because he couldn't get past his bias about what he thought should happen to the industry. So I only say that because in this class, we need to be a little bit more dispassionate about the data. And it's not whether we like the industry or not. We have to look at what we can observe about the industry's actual performance, comment on that. Right? And that's what we have to explain. So with that in mind, let's go back here. So RV, custom, again, GICS, country of domicile, make sure market cap weighted average is in your settings, global settings, make sure that's checked. So on custom, we can put anything we want. This is, again, you'll do this in your certification, but we'll start here. Add column, ROIC, standard Bloomberg field. As of the latest filing, this is the latest ROIC for each of those companies. Then add column WACC. There's the today's weighted average cost of capital for all of those companies. Spread is the difference between the two. So, is this an attractive industry? Pharma, today, attractive industry? No. Is this industry creating value today? That's why it's not an attractive industry. Today, pharma has a negative spread. Today, pharma is destroying value. It's not what you think. Historically, pharma's been one of the best performing industry, but today it's not. And that's what I'm saying. We have to get past our biases on pharma, and we have to think about what are we actually seeing from pharma today, right? Because as part of your write-up, you are going to be doing a 5 forces analysis on pharma today. Right? Everybody familiar with Michael Porter's 5 forces? All right, if you're not, look it up, but you should have already had that in your previous classes. So, power buyers, substitutes, new entrants, what else is there? Barriers to entry and exit, new entrants, substitutes, rivalry, that's 5. Supplier. Anyways, here is the 5 forces. So, buyer power, supplier power, substitutes, entry and exit, rivalry. So here's the thing. I could write up the 5 forces today, which is part of what your assignment's going to be for the I and the EIC. So it's look at the observable industry spread, explain it using the 5 forces. So here's the point. Buyers don't have a lot of power because they need the drugs and they're under patent protection, so I have to use the drug. There's not a lot of supplier power that are affecting the drug companies. And it's really hard to get in this business because of patents and government regulations. That helps them make money. There's not really a lot of substitute choices I have for the medicines that are under patent protection. And therefore, there's not a lot of rivalry because they're the only game in town. So these companies must be making a lot of money. What did we just observe? They're making 5%. So yes, historically, that has been generally true for pharma, but that doesn't explain pharma in 2017. Something's amiss here that's causing it to make 5% because everything we just said doesn't explain the 5%. So this is what I mean by when you do your write-up, you can't also just write what you think it should be. You got to write something that explains the 5%. And there has to be something about those 5 forces that's causing Lilly and the industry to make 5%. Right? So that's what I mean by explain the data. Don't explain your bias. Yes, sir.
So if you have like an industry that has like a negative spread,
Oil and gas.
a particular company that's doing really well,
Mhm.
industry with a positive spread, is that you said like industry is 50% of the performance, so would that like supersede?
Well, as I said, we're at the industry level now. We're at not the company level. So if the industry has a positive spread, there's a reason the industry has a positive spread. If the industry has a negative spread, there's probably a reason, and that's what we're trying to understand. What is the reason that's causing the spread to be positive or negative? We're using the 5 forces to communicate it, and we're using Bloomberg to look at the actual data to help us determine whether it has a positive or negative spread today. Not in the past, not in the future, but this is a current snapshot view. It's the today view. Does that make sense? Okay, so a couple more things. Number 1, you're going to need to take a screenshot of this as part of your assignment. So everyone will have GICS, domicile, Chipotle, and you'll have to take a screenshot. How you take a screenshot? Up here, top right, if you hover over this is the Take Screenshot button in Bloomberg. Okay? When you click on that button, take screenshot, save it as a file, choose somewhere on your desktop, downloads, put it on a thumb drive, file name. My convention, which you don't have to follow, is I will give you the ticker symbol, so LOY-RV, so you'll know which Bloomberg code I used to get the screenshot. So when I do screenshots, I'll post it in this format, so you know the company and the Bloomberg ticker. I'm only doing that so it will help you if you have to recreate what I do and you see my screenshots, that you'll know where to go, right? Because Bloomberg's you'll find out, has like over 30,000 screens, easily lost in there. So nonetheless, that's my convention. You can save it what you want, but you're going to have to take this screenshot for Chipotle and upload that along with the beta screenshot as part of your assignment. And here's the thing. I don't want you sharing screenshots. I'm going to consider that an honor code violation. And the main reason is because you'll never know how to use Bloomberg if you don't do it yourself. All right? Somebody can help you get to this screen, but I want you to take your actual screenshot yourself. All right? It's just very important because that will help you learn the tool. Don't use somebody else's screenshot. So again, save it. It's on your desktop or downloads folder. I put in my downloads folder. So if I go here to downloads, and there is that screenshot we just took. So that's what you're going to upload. And here's what I'd recommend. You're going to need to do the screenshots for Chipotle for Monday's assignment. You're going to need a Bloomberg terminal. You happen to be in a Bloomberg lab now. Take advantage of that before you leave today. So take the screenshots that you need to do Chipotle while we're doing this. Might help you versus coming back and do this tomorrow or something like that. So back to this. Competitive advantage. The C in the EIC. Industry is what's the industry spread. Competitive advantage. Here's the point. We are going to, again, differentiate from your friendly strategy class, right? Because in strategy, we're nice and everybody has competitive advantage. In the real world, that is not true, okay? And I'll just tell you, I'm working with probably 30 companies this year, right? And here's the thing. No matter how bad those companies are doing, they actually think that they have competitive advantage and they think that they're good, even when they're actually not. So we need an objective criteria to distinguish between good and bad. So our criteria, looking through a financial lens, is going to go back to the concept of spread. And here's how I want you to think about competitive advantage, right? Which is, there really is the idea of an industry ROIC, meaning some industries are better than others. You will see that as you use the Bloomberg tool. Pick different industries, companies and industries, look at the spreads. You'll start to see differences across industries. So there is this notion of an industry ROIC. We see it in pharma, and everybody's going to be somewhere around that ROIC. So right now, everybody in pharma is having a tough time. So the point is, competitive advantage is doing better than your peers. Right? If you think about cost of capital, opportunity cost is for the same level of risk, what is everybody earning? Well, if that's average, then competitive advantage is above average. Right? So that's the definition we're going to apply this semester to competitive advantage. We're looking for companies that have above average spreads. That demonstrates competitive advantage. Okay? So, again, as I said to the last two classes, don't go reporting me for this. I know we're in an economically and politically sensitive time, but here's the point. A couple days ago, we got ranked 25th by U.S. News and World Report. We're the 25th highest ranked institution, I think it's in the country of the world. Everybody say a ranking? Business School at Smith. We're the 25th in the country or 25th in the world. But basically, we're ranked pretty high, which means if you're in this room, you're smart, and you're at one of the top institutions in the country. But by definition, half of you in this room are below average students. And that's what I'm saying. I'm not going to go there because you guys are going to get pissed off if I call you below average. So if I say you're below average, you're going to be pissed off. And it doesn't matter if it's true or not. You're just not going to like that. But statistically, half of you, even though you're in an above average cohort, are below average students relative to the people in your cohort. What I'm saying is take that to the corporate world, right? Because in a market that's doing really well, if I'm not doing better than my above average peers, then I'm just average in that great cohort. It doesn't mean I really have competitive advantage. It just happens to be in the right place in the right time. I'm in with a bunch of smart people. If I'm really doing well, then I'm doing better than my peers. So competitive advantage is relative performance to the peers, specifically relative spread. That's what matters to competitive advantage. So, does Lilly demonstrate competitive advantage? Yes or no?
Yeah,
Yes? Why?
because their spread's better than the industry spread.
What is their spread? Approximately.
Like positive theory,
Okay, and what's the industry?
like -2.5.
That's the answer. That's the answer I'm looking for in your Chipotle assignment. Okay? Bristol Myers. Bristol Myers demonstrate competitive advantage. Yes? Yes. It is possible to have more than one company demonstrate competitive advantage. Matter of fact, half the company should have some form of competitive advantage. Some a lot more than others, but that would be the point. All right? So Lilly and Bristol Myers can have some form of advantage. It can be a slightly different advantage, but those are my above average companies. Questions? All right. So let me just quickly show you another thing. If you see this little gear icon, click on the gear icon, save as new template. You can call it whatever you want up to, I think, 11 characters. I'm going to call this 443 spread. Save. Now, I did this in a previous class, but then you can create this template. So across this screen, it says create templates. These are the saved templates. So when you start putting these custom things together, rather than always having to put them together, you can save it. So anytime you go to a company, click on the template, and it'll remember the templates that you created. So it's just a way of speeding up your process in Bloomberg. Okay. So here's the point. I want to switch this to another company, ExxonMobil. Is this an attractive industry? Yes or no? Is oil and gas today an attractive industry? Is it a value-creating industry? Why not? Spread's very negative. Is ExxonMobil creating value? No. They're destroying value too. Tough industry, right? Does ExxonMobil demonstrate competitive advantage? Does ExxonMobil have competitive advantage?
Yes.
Why? That's right. You can destroy value using the definition we're taking and have competitive advantage. So that's the point. Exxon's probably pretty good at what they do. They're probably better than some of the other oil companies. They can't escape that they're in a bad industry, but they're doing better than their peers in a tough industry, so they probably have some competitive advantage, but they're still in a tough industry. See, that's the way I want you to start thinking about it as you're explaining these things, particularly in the industry. Everybody see what I'm saying there? Questions about that? So let's go to another industry. Airlines. Are the U.S. airlines on this list, is this an attractive industry? Yes or no? Yes? Okay. So this is the point I was making. This is what the student I told you about couldn't get past. Is the airlines are actually doing really well right now because when oil was 100, nobody made money, but when oil dropped to 40, all the airlines actually started making money. Same thing with fees. You can't walk on the plane without getting some sort of fee, bag fee, charge fee, change fee. Using the bathroom fee is coming up. You want a cup of soda, we're not going to charge you for that. Matter of fact, did you see what they're doing now with the basic fares, the quote-unquote basic fares that United, American, and Delta have introduced? Be careful about before you buy one of these. So basically, to get the fare cost even lower, basically what they means is you don't get a seat assignment until you get to the gate, which means they're going to put you in a middle seat at the back of the plane. It means that you can't carry on a bag anymore. So they don't allow you to carry on a bag. And they charge you $50 for a check bag. And they don't give you anything to drink, and you're not allowed to use the overhead compartments. That's the price that you're going to pay for the basic fare that they're now offering. And I'm just thinking about that and about the power that we don't have as customers, that we will complain about this, and you're going to fly them anyways, right? And the number one reason you're going to fly them is what? It's not just price. I'll give you another reason. Has anybody flown out of Dulles recently? Were there any other airline choices outside of United there? You flew where? I use Emirates? Okay. So internationally. But that's the point. Where did you fly? Okay. So how many airline choices did you have to go to the UAE? They go directly from Dulles to the UAE. Then you got two. So that's the point. You don't have a lot of choice on where you go. Same thing. Fly to BWI, most likely it's going to be Southwest. Right? And I'm not saying Southwest is a low-cost air, but the fact that since if you want to go from here, for example, to Raleigh-Durham, which is I had to fly that flight recently, you know it's a one-way fare with 2 weeks advance purchase from here to Raleigh-Durham costs? $480. Right? Exactly. Somebody said Jesus, right? That's a it translates well in our video, but basically, oh my God, that's a very high fare to go 300 miles. Why? Because Southwest is it. There just aren't any choices to go from BWI to Raleigh-Durham. And so they've jacked up the rates. So you think they're a low-cost carrier until you actually fly them and you realize you don't have that much low cost anymore. So I only say this because we start thinking industry structure. The buyers actually lost a lot of power in the airline industry through consolidation because those top four carriers in the U.S. represent 80% of the market, and they've divvied up the market almost regionally, and it's the fortress hubs, and there's just not a lot of choice to fly through these fortress hubs, particularly with direct flights. So as a result, they're making more money. See, that's what we have to observe and explain when we talk about a 19% industry return on invested capital. That's why the whole industry is doing well. This is what you need to talk about for Chipotle's industry. So here's the next question. Does United have competitive advantage? Yes or no? No. Because United spread's less than the industry spread. This is what I mean. United's in the right place. They're in an airline market that's been chopped up amongst four players as an oligopoly that's making a lot of money with not a lot of route choices and not a lot of competition and a lot of fees that everybody's charging. So they're benefited by that. But they're not doing any better than anybody else. So they're just in a good place because they're in a good airline industry. They're not demonstrating true competitive advantage. That's what you need to say. That's what you need to interpret. Does that make sense to everybody? Okay. So here's the other thing. I don't care about today as much as I care about 5 years from now, right? Because as an investor, I care about future cash flows. So today I can observe what's happening with the airline industry. But what matters more is how's that going to change? Is the spread of the industry going to change in 5 years? Is the competitive advantage of United going to change in 5 years? That's the other part of your assignment for Chipotle. So when you do the 5 forces, the I and the C, I not only want to hear what you think the industry is doing today, which is based on observed data, but I then want your opinion, crystal ball, about what you see 5 years from now. That one, there's less of a correct answer for it because it's real and nobody can predict the future. So 2 of you, because just as one analyst could have a buy and another could have a sell in the exact same company, one person could say, hey, airlines are going to be great 5 years from now. And another person could say, no, airlines are going to be terrible 5 years from now. And you both could get a perfect score in your grade as long as you can support it with facts and process. So if you really think about this assignment, this is the process assignment, right? And by the way, I don't know how much you know about the airline industry. Many of you probably don't know much other than you've probably flown a couple of times. Some of you may not have even flown. So here's the point. This is a real world class, which means it's perfectly acceptable to use real world data. So what that means, 2 things as a starting point. In ELMS, under VBIC, you probably used this in a previous class. You go to VBIC, go to industry, and there's a data service called IBIS World. You'll log in, and IBIS World is industry reports. So I'm asking you to do a 5 forces analysis on your industry. It just so happens that I could type in Chipotle, spell it right, hit search, and this is the IBIS World report or reports that Chipotle is in the United States. And in these reports, professionals who cover the industry have talked about the 5 forces. It is perfectly acceptable to reference that data to answer your questions in this class, right? Because it's the real world. So that's the point. We're going to be working on companies that we don't know a lot about, and there's professionals that know a whole lot more that are trying to answer these questions. Use that data. There's nothing wrong with doing that. Just don't plagiarize. So source IBIS World article. Or if you quote, don't plagiarize. But it's perfectly acceptable to answer your question by using this data for Chipotle. Because again, I don't expect everybody to know what's going on in fast casual and all the forces. Here's an example where they've helped you think through this and how it could change. Use that to shape your opinion. Yes, sir.
So is that a combination of both the screenshots, our analysis, and
You don't need to read the IBIS World Report. I'm just telling you, it will probably help you, particularly if you don't know a lot about Chipotle's industry. The other thing that will help you is in Bloomberg itself. And you'll see this in your certification, but I'll give you a hint. BI stands for Bloomberg Intelligence. BICO, BICO, Bloomberg Intelligence on a company. Not all companies have the BI company, but most of them will have BI industry. Chipotle happens to have both. So what Bloomberg has been doing, so you have to go to the company first, so go to Chipotle, is they've been hiring ex-Wall Street analysts to come and work for them that write research, and they write research for Bloomberg, and they put it out here on what's going on with the company and the industry. So in Chipotle, if I type in BICO, B-I-C-O, Bloomberg Intelligence on the company, then 2 things. 1, here is the company data from these 2 analysts who specialize this, and they've written, here's all the things that are going on with Chipotle and its industry, with lots of stock charts. And oh, by the way, that's the company one. Here's the industry one. So here's a bunch of industry data with industry charts of what's going on in the industry. Again, feel free to use that. Help you answer the question. Because to be honest with you, part of this class is following a process, but part of this class is to learn how the market's really working and how the market's really thinking. And we're dealing with messy stuff, so we're going to have to explain real-time data. So that's the point. It's not always an intuitive answer. Like why pharma is not doing right now, it's not necessarily intuitive. Just knowing the nature of the pharma business. So what's going on that's causing that? We'd have to dig into this. It doesn't hurt to have experts help us do that. Right? And so that's where Bloomberg comes in, and sources like IBIS will help you as you do this assignment. Right? So feel free to leverage that. Again, don't plagiarize, source. Questions? So, EIC assignment. It's worth 2% of your grade. It's an individual assignment. It's due Monday at 10 a.m. for all sections. Here's what you got to do. You need 2 screenshots. right? Screenshot number 1 is for Chipotle, RV. Make sure GICS, country domicile, don't select a sub-industry, markets, beta. Screenshot number 1. Screenshot number 2, custom, spread. I don't want anybody commenting about this because it's the homework assignment, but this is the spread that you should be getting. Now, I've been alerted that I've had my Bloomberg account now for about 8 years, and on the new accounts, there is some flag that you guys are getting that'll limit you to 15 companies in the screen. Like I have a whole lot more than 15 companies in my list, and Bloomberg for some reason has a flag that's limiting you to 15 companies. It doesn't mean you're restricted in your account. It means there's just some setting somewhere by default that they've set up in your new accounts that you have to change. And I was helping a student earlier. I can't figure out where it is. So if you turn in a screenshot that only has 15 companies, it looks slightly different than this, that's okay. All right? Because 2 things. 1, directionally, you're going to get the exact same answer, plus or minus like about 1%. And 2, you're going to turn the screenshot in so the TAs are going to see your screenshot when they're grading your assignment. That's the other reason why you're turning your screenshot in. So answer it based on what you see on your screenshot. Okay? So, but nonetheless, it should look very similar to this. Okay? And that's what you need to do in terms of your screenshots. Then, minimum 500 Word document. In the Word document, explain the E. Explain the industry and the company, just like we talked about for Lily. Explain the I. Explain the 5 forces. All right? And the RV. So is it an attractive industry? And 5 forces, why? Going through the forces. Then, and it's more important to do it in this order, in predicting the future spread, which is really what you're doing for 5 years, do I think that the 5 forces will change? And if so, what does that mean to the industry spread in the future? So I think the industry is going to get better or worse, and why? And then company. Does Chipotle have competitive advantage now? And as the industry changes, do I change my view on whether Chipotle will have competitive advantage in the future? And to be honest with you, you do that, it'll take you a couple pages. So 500 words is pretty easy, right? So nonetheless, that is your homework assignment. That's what you have to complete Monday, 10 a.m. And the other reason I chose Chipotle is that, and you might want to address this, they've actually had a problem last year. What was their problem? I'm sorry? The E. coli outbreak. And do you think that damaged their brand? So that's the other question, in a way, of competitive advantage you got to address, which is they're probably taking a little bit of hit on their performance now because of that scandal. And the question is that a long-term thing or has that been a short-term thing? And it's an open question in the real world, by the way, as to whether or not you like Chipotle as a stock, not just whether you want to shop there, because if that's really damaged their brand long-term, that could really hurt their growth, hurt their returns, hurt their ability to get competitive advantage, kind of shrink their spread over a long period of time. So that's something, in a way, you're indirectly touching on when you're writing this paper. Right, because that should come up in your competitive advantage section is do they have the competitive advantage they did considering the scandal, and are people going to look past that and forget about it? So for example, back in the 80s, there was a Tylenol scandal where people were poisoning Tylenol with cyanide, and Johnson & Johnson had to immediately pull every bottle of Tylenol from every shelf around the world. And hurt them for a while, but because they were so proactively doing it, and they put, matter of fact, that's actually the whole reason why you have the safety caps with the stuff over the top to make sure you haven't opened it. It goes right back to the scandal. But the fact that Johnson & Johnson did the right thing, and even before the FDA came in, they pulled everything. They instituted the idea of safety caps. They instituted all the features. Customers then said, you know what, I trust them. And today people don't blink when they buy a bottle of Tylenol. Is Chipotle handling it that way? Or is Chipotle handling it in a way that you just worry that I don't really want to go there to get a burrito? I like burritos, but I'm going to go someplace else because I just don't want to get sick, and I'm really worried about what they do. I don't know, but that's actually part of the question that you're, to some degree, answering with competitive advantage. So this is what I mean by this isn't just a purely numbers class. All right, you got to give your opinion. And by the way, there can be diverging opinions and full credit. All right, because like I said, we're making guesses about the future. But just when you guess, the way you get full credit, follow the process, use some facts to support it, use some data to support it, so it's a reasonable conclusion. Don't just completely give a swag. All right. Other than that, questions? Comments about anything? All right. So next week, Monday, Wednesday, You have class time to finish the certifications and the ethics assignments, and we will go over all of this a week from Monday. See you in about a week and a half. Have a good day. I've recorded this. It'll be posted on YouTube as a video as well. Is there anybody in here that wasn't on a team that needs to be put on a team? Did I get everybody?
Just double check. I need to include like 5 words for current and future and
Correct.
explain why.